And now it's like, okay, well, Dogecoin's rising. So what do you want to do? Do you want to, there's really got two choices. Either you let it appreciate naturally with the market, or you take the risk of coming in and shorting it and potentially getting margin called, or whatever exchanges and stuff that you are shorting on, starts limiting your account, and then you get screwed or you get closed at an unfavorable position. Welcome back, YouTube. So I wanted to do a follow-up and go a little bit deeper into Dogecoin breaking trend on the video that I discussed yesterday, because I said that we needed to break around the 8 cent mark, which is our previous high. And we know with Bitcoin, it's going to take a little bit more because Bitcoin is around 29,000. But Dogecoin's descent is a little different. And I wanted to explore that in today's video and why it may be actually easier to break its previous high. Now, we do have to take into effect that shorts and the manipulation, obviously, in the coin, but we have to look at what got Dogecoin down this last turn here and the difference here between this and the other coins, because technically we had this descent due to the shorts literally just running out of Dogecoin. This is why we had that the previous trend broke between, what is this, the actual apex here that we were pretty much getting ready to break out of, technically on the 18th. We had just confirmed this as a trend. We had our two touches, and then we had the breakdown or in the shorts via the exchanges and the bankruptcies and a lot of the manipulation and stuff that was going on. And this led to a lot of fear on the short side from the shorters via the exchanges, because no one wants to be in a situation where you're getting margin call due to the exchange's liquidity issues, or the exchange was going bankrupt and like, hey, we can't short anymore, so we need you to kind of pay up. So this puts Dogecoin into a different predicament, just because the reason it came down is a little different. But also we'll see these consecutive red candles. So these consecutive red candles, this is typically what you're going to be known as a gap down. Virtually, they're saying there's little resistance in here outside of shorts coming back in to be more aggressive with the coin to try and consolidate the price. So on the flip side of this, it can actually be a lot easier to break trend. And we've seen this before, because immediately after we consolidated down here at the bottom, we got these consecutive green candles here to come up, and we almost retested at around 7-8 before the shorts came back in and we got the rejection. This is that's what this long candle is. This is the rejection here. We're literally about to break trend again, literally with maybe 0.2 of a penny before we got the rejection here. And this is similar to what we're seeing right now, because the shorts haven't come back in heavily, but they are monitoring these numbers that I gave you yesterday, which is around 8 cents for Dogecoin to break its previous high. That's what this is again. We're seeing that this is another rejection here at around 7.6 that we got earlier today. And we're still around the 50-day moving average, but we are really, really close here to breaking trend from our previous high. And by break really close, I mean less than a penny. So this is really, really good here. And technically you have less resistance here when you have those gaps up. So technically you can get filled on the opposite side. So outside of shorts coming back in to try and control this, it'll actually be a lot easier for Doge to break that trend. And with the liquidity issues and these exchanges and stuff like that, and the fear in the market of these exchanges defaulting or halting withdrawals and stuff like that, that actually works into the benefit of Dogecoin holders, because this is a discouragement into taking these long short positions in the coin right now. So we can take a look here at the actual shorts to kind of see what's going on here. But you'll see here, this is massive, and we have a long wick on either side. This is massive indecisiveness as far as for a market trend, and they're pretty much just consolidating here, right? Pretty much like the plateau at around 4.4 million in shorts. So they're pretty much establishing support right here. And today, due to the price action and the rallies and stuff, you have massive indecisiveness as far as to whether or not they want to consolidate, or whether or not they actually want to take the risk and try and mediate the price. So this is very, very interesting here. This is much different from the positions that we were in before. When we typically had our test or our runs to retest our previous lines of support, we could always just kind of watch shorts here to say, hey, okay, well, maybe they'll come in and try and stop this retest. But now, due to the sentiment of the market changing, and there's extreme fear, and with the exchanges here, they're a little bit more hesitant. And I think this extreme indecision here on both sides of this candle is an indicator. The last time we've seen this was literally right around the time, literally around the time that we saw the short spike, 2 or 3 days right before the exchanges started filing for bankruptcy. This is the last time we saw this massive indecisiveness with the short positions, and that was going to the upside. So we see here that they decided this massive indecision around the 14th, and we see that they decided to kind of go up, and then the exchanges was like, no, no more. We don't have the money. So they proceeded to get out. That's pretty much what happened here when they were like, okay, we don't have the money, so let's get out of here. We don't want to take the risk. And now it's like, okay, well, Dogecoin's rising. So what do you want to do? Do you want to, they really got two choices. Either you let it appreciate naturally with the market, or you take the risk of coming in and shorting it and potentially getting margin called, or whatever exchanges and stuff that you are shorting on, starts limiting your account, and then you get screwed, or you get closed at an unfavorable position. That's the risk that you're trying to take right now. So I know it's a really tough decision on shorts. Not that I care, but you get what I mean. So over the next few days, keep an eye on the price movement and that 8-cent marker. That 8 cent is going to be really, really telling here. And I'll put it back on the actual price chart. That 8-cent marker is going to be really, really telling here to get an idea of how close we are to actually breaking trend. And do not forget, we have a very important meeting next week with the Federal Reserve. We're going to find out about our basis point hikes and stuff like that. I'm not saying this is a bull trap, because again, this is a lot of different things going on right here that would have happened organically in the market if it were not for the short manipulation. So, that this gap getting filled up is something that technically would happen even without the shorts coming in or trying to manipulate the price. So that makes it a little difficult to call this a bull trap. However, that does not mean it's not one either. So just kind of be careful. Dogecoin is a lot closer to breaking its previous high than Bitcoin. And it's going to take a lot less momentum to get there, especially if shorts are not going to be aggressive. So just kind of keep that in mind here. But again, these prices are great. I still believe these prices are historically low. Do not try and time the market. These are all great entries. And the best thing that you can do for your coin is remove it from the exchanges. That's the best thing that you can do, so that Dogecoin can have a true appreciation or a true equilibrium of its actual price. And I do recommend getting yourself a cold storage via Ledger. I have a link in the description so that you can get it directly from the site. And a quick note on that, especially with the numbers and stuff we're expecting to get from the Federal Reserve next week, I would say especially for the short term, you can expect more of the same from these exchanges here. Don't try and pick which exchange is going to be safe and which one is going to be. They all make money the same way, and they will restrict, they will limit, they will close to do whatever they can to stay in business. You having access to your crypto is not a priority for them. Never forget that. And as always, if you like having access, you can check out Moomoo as well. They don't lend your stocks and stuff like that either. So I have a link for them in the description if you're a stock investor as well. Again, I want to thank you guys for 40,000 subscribers. I appreciate all of you. I hope you found value in this video. Like the video, share it with a friend. Of course, subscribe to the channel if you want to hear more. And I will see you in the next one.